Welcome back to the Capital Mindset Show, guys. We're your hosts, Austin and Fabio. Today, we're going to be kind of exploring two stocks, ticker symbol SEDG, the other one ENPH, both Enphase and SolarEdge Technologies. We're going to kind of be taking a look at these today. We're doing this live for you guys. So we're going to be kind of showing you guys our methodology and the way that we like to kind of do a preliminary analysis on these stocks, which is basically where we sort of analyze the business overview. We kind of take a look, or at least we try to understand on a surface level the moat. We take a look at the financials to make sure that they're meeting some key indicators that we like to see. And then also we plug it into our discounted cash flow model to see if the intrinsic value is just kind of returning a favorable price to us right now. So if you guys would like to submit an analysis request to us, please do so at www.capitalmindset.org. You can scroll down to the contact us form, and then you would input your name, email, and then the stock that you guys would like us to look at. As always, we are not licensed nor registered financial advisors, so we will not be offering financial advice. But with that said, let's jump right into this. What are we looking at here today?
All right, so we're looking at the subscriber request of the two seemingly leaders in this industry. We'll call it the solar industry for now, but it's more like the solar appliance industry. And the technology leader is thought to be Enphase by a lot of individuals for good reason. And then SolarEdge is the larger of the SolarEdge is the larger of the two by revenues. So some things that we need to consider probably is what products do they sell? What is their mission statement of the business? How are they attacking the market? So what we're going to do is we're going to pull open the presentation of Enphase and kind of go over just a quick analysis as to what it is they are highlighting for us. So immediately we're greeted with the products on display, and you can kind of see them. There are these little terminals that you get attached to your home that help you regulate energy. And we'll talk more about that later. But going over here, you can kind of see them talking about some of their highlights that they remember that the presentation is kind of like a sales pitch. But what we're getting from this is trying to see if we can figure out if there's anything of importance that can tell us about the products, as we are not electrical engineers. I think most people watching are probably not electrical engineers. So we are, as potential investors, trying to gauge what it is that this company does. So immediately, I'm going to highlight this word right here. So management has a deep semiconductor and solar expertise. So they're highlighting this expertise for a reason. So that's telling me immediately that a lot of their product has something to do with semiconductors. And we'll actually see that that is the case. You want to see here, they highlight some of the background. You can go through this and see whether or not you think that the management has the appropriate expertise for getting the job done.
Actually, something I would, actually something that I would like to note, if you scroll back up to the chief financial officer, I was reading a little bit earlier ago. Isn't there some sort of deal, I believe I was reading, between Enphase and Tesla at the moment where they were actually combining technology together there? So I think that's a pretty interesting development for Enphase in and of itself. Just as a quick note there.
Well, I mean, and here you can see I was highlighting the semiconductor. The CEO himself comes from a semiconductor company. So, and IoT products means Internet of Things. So for those who you may not know, so that's what it means by IoT. And I'm going to zoom in just in case. I'm going to sacrifice our size because I think everyone wants to see the PowerPoint, not our faces. So we'll be brief on the PowerPoint because, again, we're not reading the sales pitch of the company. We don't want to highlight that. But basically here we can see the products that the company kind of offers. As far as the traditional solar energy system, they highlight how it normally is and what they are trying to give you. And they're trying to highlight, you see, this is some sales pitch right here, cloud-based, those keywords, buzzwords, cloud-based. But it's kind of like an application that allows you to control the energy usage of your home, proprietary network technology. So we see gateway collects performance data. So everything's highlighting efficiency. Right? The word performance, right? Performance, maximum production, right? All of these keywords, it's telling us a little bit about the nature or the mission of the business.
Another thing to also note too is that Enphase micro inverter, I would actually probably say, in my opinion, that's their most important product, because they were the first to bring that onto the market, and they're also currently the market leaders in that specific micro inverter itself. So I know that when we kind of take a look at SolarEdge, now this is live. I've not taken a look at SolarEdge yet. So I would kind of actually, now just prepping my thinking, I would want to make sure that I'm sort of seeing here a product advantage that Enphase would have. Like if I had a choice and these were the only two companies I could ever invest into ever again, I would want to make sure that the Enphase microinverter has a product advantage, whether or not that is a patent on their technology, et cetera, and so forth, over the one that SolarEdge might provide, if SolarEdge even provides that, which we'll get into later.
No, exactly. Okay, then going back to here, again, I'm just highlighting some key parts. So they're talking about the whole chain of energy right here, the simple energy management technology. Again, highlighting what it is they're trying to tackle as a problem. This goes over some, again, they're trying to sell their product. So right there. So here's a key part of their supply chain, or piece of understanding their supply chain. So they're CapEx light. So that tells us something as we go forward and look at the financials. We need this kind of context. And I'll explain that when we get to the financials.
Yes.
And then we can see that they're diversifying their OpEx, right, across different continents and countries specifically. For those of you who are familiar with our channel, you know that I have, depending on the nature of how they do business, I have a particular problem with how they do business in this country, because all other countries are a little bit different in terms of their capital restrictions. Well, none, or the non-existence of capital restrictions. It's just that one that gets away with it. So
yeah, which we have other videos on the channel specifically talking about the capital restrictions that are present with China, VIU structures that the Chinese businesses exist as trading on the US markets, et cetera. So
all right, ESG, this thing that all the companies are doing right now, not really important. So then generation, storage, consumption, services, not really important. So I'm just going through it raw to see if there's anything else we need to really highlight so we can understand the product and business. Again, that's highlighting the product, what it looks like if you're wondering. Okay, they have a portable power station. Again, they're always showing this app. So this app is a key selling point of the business. So again, just about the app, consumption, monitoring, control of everything's about efficiency. Again, so here we have, again, some different products. Yeah, some different products from
to add some color to this, basically where my mind would go now, all these products are nice. All these products are nice. What do the products do? And where my mind would immediately go to this, if they're in the solar energy and the micro inverter is what they're the market leader in currently, then what that likely tells me is that they are a complementary product to the actual like the infrastructure of the solar panel itself, the physical solar panel itself. This tells me that they're a complementary product to that itself. So basically from there, what that tells me is that the headwinds of the solar industry and the tailwinds of the solar industry would have an effect potentially on the revenues and the sales of Enphase and SolarEdge technologies.
Yep. So what you're looking for, the word is agnostic, platform agnostic. So here we can see the projections by the company as far as the addressable market. So we can see that they basically say it's going to grow. All right, I think we're pretty much done with highlighting this stuff. Oh, this is maybe some things that they're targeting for, right? So baseline, so they're targeting 35% gross margins, 15% operating expenses, 20% operating income. Okay, interesting. So
that now colors our thoughts for when we get to the actual discounted cash flow portion itself too.
Yep. So we can make adjustments. All right, so blue ocean opportunity, residential. So I know that they have residential solar, residential storage, small commercial solar, off-grid solar, and storage. Okay. And this is where I'll cease because everything else doesn't really matter for us at the moment. So
yeah, and especially too, since so now that Fabio kind of finds the one for SolarEdge as well, just kind of talking about this now, at least like what my thoughts are coming into this is that okay, so we know that these products are complementary to the solar industry itself. So now where my mind goes with this is I'm sort of starting to envision, okay, what are potentially some headwinds affecting the solar industry now that might make it harder for potential new customers to want to invest into solar energy, which would then have a trickle down effect and affect Enphase. So my thing about that is that even though we're seeing the solar energy industry grow and has been growing pretty rapidly due to the lowering of costs, we're also seeing too that there's still sort of the big energy players are not likely to relinquish their monopoly over specific various aspects of energy itself. So I would actually want to see with this particular business how they would manage a decrease in demand for solar power. And those are just some of my thoughts just coming into this as we go further down the road here. So
Yeah, so one other thing that I will talk about SolarEdge is that they have another division called
mhm.
SolarEdge Automation, which I think most people don't know about. It's basically a division of their company that focuses on automating industrial manufacturing. So for those of you who may not have known that, you may find that to be a little bit interesting. I am trying to see specifically where they offer some more information about that, which I actually just found here. So I'll go ahead and share it. So you can see here on SolarEdge's own website, the different kinds of automated machines or the industries at which they operate in. So again, basically just focusing in automation or industrial automation. Whether or not this will be successful is a separate question. Any thoughts you have on that, Austin?
I just think that's fairly interesting. I'm also kind of curious as to now what exactly the products are that SolarEdge sells, if it's similar products to what Enphase sells, or if they're more so focusing more on sort of that industrial automation. And then if so, if they're focusing more on that industrial automation, is this even really a comparison we can draw at this point? Or is it more so that we are comparing basically one tiny business, one tiny segment of SolarEdge's business to the entirety of Enphase's business? I mean, this is live. I have no idea. These are the questions I ask myself as I come into these sorts of things. You know, when I get new information, I'm putting it together in a big puzzle. So that's at least the way that I
Yeah.
would look at this. But
So,
now we are here. So those questions will hopefully be answered, you know. So
all right, so here we can see in the investor presentation, again, we have to keep in mind that a lot of this is kind of like a sales pitch of the stock. So I
yep.
don't really care about many of these different talking points. But I do see here, for example, power optimizers shipped. So they're a big player in power optimization.
Mm-hmm.
Interesting that they say
It's all
that and
gap.
then they separate that. Just
Yeah.
normally companies just say revenue. There's no other kind of revenue.
No. That's non-GAAP net income.
I know, but
So
this is
yeah.
GAAP revenue. I'm highlighting
Oh
GAAP
yeah.
revenue.
Oh, okay.
Normally they
All
just
right.
say revenue.
Yeah,
Um,
I had thought that like you had accidentally thought that the non-GAAP net income was non-GAAP revenue there, but then that is definitely weird. I don't
yeah,
know why they have GAAP
it doesn't
revenue.
matter. It's
Yeah.
just like
Yeah, it's
normally they
just
don't need to put that.
I'm just getting bogged down in the semantics of all this.
So yeah, they're talking about their tailwinds of the business, but that's something else. Okay, so here's what we wanted to see: SolarEdge solutions. So SolarEdge solutions, we see smart energy devices, very similar to Enphase, solar inverters, EV charging, smart modules, basically a lot of the same things. Oh, look at there, they got their own app. Everyone's got an
Mhm.
app. Energy bank, so a battery, very similar. Okay, we see SolarEdge commercial solution. So they're basically a direct competitor. They have a commercial solution, a residential solution. They got an app, you know, very special. They have an app. You don't think that's special, Austin?
It's It's nice. I saw
No,
the same thing with
it's
Enphase
not
too.
nice. You're not, you're spreading FUD. You're not a believer. So geographic expand. Okay, whatever. This is sales talking points. Whatever. Don't care. Okay, here again, highlighting. Okay, so this is important because this is looking ahead. They want to focus a lot on commercial. So when I'm pausing and I'm not saying, oh yeah, whatever, I'm saying it's kind of important, or it can be important to get to gauge management's vision and separate management's vision, or what you might be assuming is the future of the business versus just what's, sales pitch. All right, so they want to expand into utility and commercial. That's what I'm getting from that. Whether or not they'll get there, no idea. We'll figure that out later. Current market position, this is from 2019. We can see residential is by far their biggest, and they want to make utility and commercial much larger. Okay, so we didn't really get that from Enphase, but we shall assume that they think the same. Okay, and here we can see global investor market PV world supplier rankings. Okay, so we see a lot of large players here. Oh, you see right there. What do we have there? Enphase Energy. And then we see here Enphase Energy. And we see here Enphase Energy. So interesting. Quite interesting. This company, let's take their word for it. They are ranked #1 by revenue, which we know they are over Enphase by revenue. But it is kind of like a story where they, yep.
I think, and we can also confirm this later.
No, yeah,
later on.
I'm saying I'm confirming it. Because I know for a fact the revenues of Enphase are less than SolarEdge.
No, but I'm also saying I think a large part of these revenues are also coming down to a lot of they're also acquiring some businesses as well. So maybe that could
acquisitions may, they probably are doing that. So again, we're seeing optimizers, all energy optimization kind of stuff. And this is like their future products that we can kind of see what they want. But you see efficiency, power rating, dollars per watt savings. So dollars per watt goes down, etc. And here, I hope they will talk a little bit about their automation business here, but strengths within SolarEdge, mobility division. Okay, so these are the last things. Basically, this nice picture of a server, cloud computing, they're involved in that.
Nice.
But yeah, if we can see, they probably are going to have to spend a lot on R&D, but that's a good thing. It's not necessarily a bad thing.
I would probably say all of the companies in or at least the two that we're looking at would spend pretty heavily on R&D.
Yep. So innovative high performance powertrains with gearbox. And so this is actually interesting. E-mobility division. So they have a division within their company that focuses on electric automobiles.
Interesting.
So developing powertrains and such. I did not see that with Enphase. So we don't really care about the financial performance for now.
For now, yes.
All right. So now let's go over. We got an idea of these businesses, what they kind of sell. So we're going to go over just quickly some historical price performance and get an idea of what we're looking at. So for Enphase, we're looking at a fantastic investment since IPO for the time being, right? You bought it then and you held, you're up, about 3,000%. Really good. Good job. And if you were buying here when they were really hated, very good job. Significantly better performance. That doesn't mean they're good investments now, but congratulations if you're one of them out there. And then SolarEdge Technologies. Let's take a look here. So SolarEdge, not as good. That could be for a variety of reasons, but so even on the quote unquote low or hated period for these solar companies, you underperformed Enphase, which probably meant that Enphase had a lot more pessimism going towards it rather than SolarEdge Technologies. So, or it could also be that SolarEdge Technologies was a little bit more dilutive over this time period. That could also add to that story as to why that happened. But what we got here is, in summary, high flying companies, right? No doubt they have appreciated in price by a substantial amount within a short period of time. And a lot of this growth occurred in the last year. So from that, I think now we can get into some valuations. But for now, before we get into that, are you, Austin, so far interested in what you see? Do you kind of understand the business, what it is that they're going for, their goals, their targets? And
well, yeah, and like I respect the mission. I do. I really respect the mission. And I have at least a preliminary understanding of their products. However, my question is, how much do these products cost? And then if so, if it's expensive, is that then potentially a scalability issue? Because how would you be able to, I mean, I would have to have my question answered about how much these products cost, because then if they cost too much, how would you be able to scale? You know, like if cost is a legitimate barrier and people can't afford your product, how would you be able to scale? So that's sort of my question, at least coming into this. That really kind of colors my investment as well, because again, this is just my opinion. If the business can't scale, why would I want to invest in the company after it's already had its run up? You know, I would feel like I'd be missing out on the party, and I'd be joining right as everybody's leaving, you know. So
well, I know that the Enphase products will cost between about 6,000 to 8,000 for the Charge 3,
yeah.
and close to 20,000 for the Charge 10, the
So
N
then,
Charge.
yeah, and then my question here is, is that the cost for the entire installation, solar panels, complementary products, everything, or is that just the cost for Enphase's part within that small little pie of the entire pie that is trying to install your own
No, it's just
solar
the
panel?
Enphase. It's just the
Yeah,
Enphase
so
system.
that's kind of what I'm saying. Now, is that potentially a cost barrier? You know, so those are the questions that I'd be like during a DD, during a deep dive. Those are the questions that I would be asking myself. I would want to see, I would actually want to kind of get into the trenches of sort of the people that are very much in favor of really solar energy and clean energy, and just sort of see like what the crowd consensus is behind a reasonable price for these sorts of things, because it could be a reasonable price. I mean, I think it was either SolarEdge or it was Enphase that had over $1 billion in revenue. It could be a legitimate favorable price for these things. However, I don't know. You know, I don't know. I'm not at liberty to state whether or not I do or can say with certainty whether or not it is or is not a favorable price, which is why during a DD, I would want to look further to see exactly sort of that consensus behind that, because that then colors if I believe the business is scalable. And if the business is scalable, then if it's if the price returned is favorable and it satisfies my assumptions of risks, then yeah, I would probably be willing to potentially open a position in this company. But again, this is live. I have no idea. You know, that's why we're also going to be plugging this into the DCF and sort of looking through this later and just kind of taking a preliminary view at sort of the financials too. So
Yeah. Okay. So yeah, I agree with a lot of that. It's just it depends on what we think the future for this company is going to be. We can't we would highlight that we should not be falling to FOMO for this investment.
yeah.
So let's actually take a look at the model, and then we can kind of talk more about what we see for this company. Let's start with Enphase.
You know, before we even kind of go through this, I would actually like to see their key ratios, because I kind of want to see some of their margins. I want to see like a little bit. I want to see like a margin analysis. So okay, interesting. We're seeing gross margin growth. Actually pretty decent scalability on the operating margin, which those are typically the first things, you know, in a preliminary analysis I really look for. I want to see that there is at least a favorable spread between the gross margin and the operating margin. At least that's me personally, because if I see too much of a spread and it's consistent over time, then that could indicate to me that there might be scalability issues present in this business. So
Yep. No, very good.
yeah.
And I think everything kind of, nothing really sticks out to me. I just see there is a good amount of debt, but they have been scaling that down a little bit of
Yeah.
a rise from 2020 to 2021. I'd go over this. Okay, so we actually see earnings quality is actually quite high.
Yeah.
That's good.
I was about to say too, that was a pretty incredible cash position they had on the cash ratio, at least looking at the cash ratio itself. So those are typically the things that I like to see. I don't think it's an incorrect assumption to assume that whenever I'm looking at a potential investment, I like to see a lot of cash. I like to see a heavy amount of cash on the balance sheet, just personally. But then I also dig
Yeah.
deeper and I like to go into the statement of cash flows, and I like to see how that cash is derived. Preferably, most preferably, I particularly like it when that cash is derived from operating activities itself, not even so much issuing of equity or debt, to be completely honest. If I can see a company that has a lot of cash and has a lot of consistent cash from operating activities, that is a major green flag in my opinion. So
Yep. And I think we can see that over here.
yeah,
they have a decent amount of cash. It's evident in the enterprise value. You can see here that the PE is really high, but the price free cash flow is less than half of that. So they're making more cash than they are GAAP net income. So I think now we can kind of discuss some potential returns. So let's say 10%. So at 10% market average return, again, I have issue with that statistic, but it's not
just for
that
the
kind of
sake of
video.
this,
So
which we can put out another video about that later.
correct. So based on that, assuming we are being very aggressive here, because again, you're saying 40% per year for 10 years. Okay. So
yeah, that would mean that the solar industry, bearing in mind sort of the coloring book here, the solar industry itself, the cost would have to continue to decrease, the demand would have to increase with the solar industry. And then even after all that's been satisfied, people then have to buy Enphase products. And Enphase has to offer these products at a comparable and favorable price. There's a lot of assumptions that need to be made here. This is a big.
And I'm not assuming any share dilution. So if I even assume half of what they've been doing, less than half of what they've been doing, it immediately eliminates even 40%. And we're again assuming a rate of return of 10%. So you got to ask yourself, are you willing to risk capital in this company to just achieve the historical market average? So this tells me, based on the characteristics of this industry or this company, I would expect there to be a decently sized price correction at some point, or stagnation, but typically you don't have one or the other. And there's nothing wrong with that. And if you still believe that the business is going to grow, then you would reevaluate at that present moment, or at that time, not the present moment, but at that time you would reevaluate, and you may actually find yourself having a greater buying opportunity. For example, if you believe they were going to grow at 30% and you wanted to outperform the market historical average by about 5% based on fundamentals, of course, because we want to highlight this. I should highlight this. Mechanically, a stock just goes up because there's more buyers and sellers. So if you ever sit down and ask yourself, well, why is the stock going up when it doesn't follow fundamentals? Well, that's because mechanically a stock just goes up because there's more buyers and sellers. But a lot of people, for them, it doesn't click. That long-term fundamentals will reflect in the stock, right? Because the only value of an investment is technically in the long term, the cash that the investment can provide back to me as an investor. So if you can ask yourself, think of it like a private business or a privately held enterprise. If I make a business and you want to go into business with me, you're going to ask yourself, how much money are you going to make and when are you going to make it, right?
Yeah.
Relative to how much you're going to put down in capital. So if you're going to tell me that, like, let's say this business will never be profitable, what's the value in it to you? How much are you willing to pay? Or it's going to be profitable in 100 years. What's the value of it to you? Or even like 30 years. How much are you willing to pay for that? And then, of course, comes the question of, well, it depends on how fast it's growing, et cetera, et cetera, et cetera. Yes, that all depends. But there is a point where the valuation is too high, and despite the high growth rate, it will not make sense.
Yeah.
Right?
Now, if you could have gotten this stock for $1, this would have been a fantastic investment.
Well, hindsight's
Because you would have
2020.
had exactly that, but you would have had almost not unlimited, but you would have had a huge amount of you would have had a huge margin of safety where your assumptions could have been proven wrong time and time and time and time and time again, and you still would have come out.
I bet you that the profits or the sales when it was $1 were either non-existent or also extremely low. And yeah, I'm just looking here. Yeah, they were actually, no, they were not. When they were $1, the sales here were $286 million. So that tells me that, yeah, potentially at the time it was $1. If you had done an evaluation on this, you may have found that you had a decent margin of safety into your assumptions. All right, so we want to be a little quick with the next one, but we want to take a look at
the DCF for SolarEdge technologies as well, just sort of to kind of go into that as well. And then sort of definitely starting off with the key ratios first, because those are kind of the same things that I'm going to be looking for again, especially given the industry by which this operates, and it's kind of facing the same uncertainties present with solar panels in and of themselves that then filter down into these complementary products, Enphase and SolarEdge. So SEDG, yeah.
All right, so yeah, gross margins more or less same, worse than Enphase.
Yeah.
Debt ratios better, but it got worse. There you go. So they have been doing some acquisitions probably. Current ratio is pretty good. Cash ratio is good. It's great. Yeah, again, then we see operating margin. We saw a decline. That's interesting. Could be a fluke, but we've seen a decline. ROA, ROE. So we see basically what I'm getting from this is Enphase is the up and coming rising star, and
Fabio, in this instance, especially because Enphase at least was sort of dealing in semiconductors, I would definitely say that the supply chain shortage that definitely plays a role in this as well. So what I would at least do during a deep dive is that I would seek to normalize the cash flows. And then from there, I would actually be more conservative in my assumptions too. Like I would require a greater margin of safety because that's now an added layer of risk onto there. This is live, ladies and gentlemen. This is live. This is just my thoughts as I'm looking at this particular business itself, given its products, the business it's in, the fact that it offers complementary products to an otherwise overall industry that faces specific headwinds that then filter down to these particular businesses themselves. So
interesting.
yeah,
well, anyway.
like I just said too, this is 100% live right now. This is completely unscripted. This is literally Fabio and I going through the trenches of this and just orienting our thoughts.
This is a kind of business I don't expect to trade at book value or anywhere near book value. In other words, I expect a premium on book value. But in 2017, you could have picked this up for almost book value. So again, going to show that during that era where they were hated, you had a very good margin of safety or a decent margin of safety. There are some industries where I expect the business to trade near or at book value. And so when people say, oh, it's super cheap, it's trading at book value, I'm like, not really. But when an industry is trading close to book value, when it's in one that doesn't normally, or it's not necessarily normal, right, or necessary to trade at book value, then I start to question that may be a little cheap. So again, okay, so a lot of this stuff got weird, or maybe is weird for the company. I'm starting to think that 2021 is an anomaly for this, because all their metrics are getting whacked.
Well, also it would make sense and give further credence to my at least initial assumption that this has to do with the supply chain shortage. So
okay, so basically I have to go in and normalize the cash flows.
Yeah.
Because they're
but you also would have to increase your margin of safety too, because we don't know when this supply chain shortage is going to end. They've said by 2022 or 23. So I would definitely add on to the discount rate from there as well.
Actually, I think they're perpetually in very, yeah, I'm just going to assume
Actually, yeah.
Okay, so basically I'm looking here that the assumptions, if you had to choose, it looks like Enphase would be the better option at current assumptions. But here's the thing, there's a lot of things that we would need to explore, like the other types of businesses that SolarEdge is in. But it does appear that Enphase is the superior business. And going back to Enphase, if we go back and do a 10% at least.
Also, we need to explore deeper tailwinds and headwinds facing the solar industry as a whole, the solar energy industry as a whole, because that will have a direct impact on these, because these are offering complementary products to those who wish to engage in clean energy, solar energy, et cetera, so forth.
All right, I guess with that, we kind of covered a lot of things. So let's kind of wrap up and say, okay, so Austin, are you interested in this industry? If so, are you also interested in buying any of these right now at the moment in just a paragraph of words?
Would I buy right now? No.
No. Okay.
Am I interested in these companies as a case study? Yes. As a potential investment? No. Do bear in mind, I'm also operating from a preliminary perspective. I would actually like to dive deeper into these and just kind of see if a lot of the assumptions that I'm holding are mitigated. But for right now, there's too much uncertainty present within this particular business industry itself, because of the nature of the fact that it's a complementary product to an industry that will likely face pretty decently significant headwinds with some of the major players within that overall overarching industry as a whole right now. So case in point, the TLDR, no, I would not be investing into this. Me personally, I would not invest. And then, yes, no, I would be interested in looking further into this company as a case study, but not as an investment. How about yourself?
I agree with that. For me personally, it's not going to make it into my portfolio at the current prices. The assumptions I'd have to make are too steep for me, but for others who may know more than me as to what the industry has, we can do another video and change our assumptions there. But I think I have to assume very aggressive assumptions for these investments to make sense. So it's probably not going to make it in there. I am interested in the companies though. I think so. Remember, we have to separate the stock from the company itself, and the stock will actually perform maybe differently than the business itself. So I actually think the businesses, these two businesses, will perform good to very well in the next 10 years. But I do not think, or I have my hesitation / doubts that the stock price will perform in tandem with that business performance, because I think the stock price has priced in a lot of the growth. So again, I want to separate that these two businesses, I do actually like them. If I had to look at one that interests me a little bit more, just because maybe it's a little more complicated, is SolarEdge. but I do think that Enphase has something about them that makes them the leader.
Yeah.
So,
And
or the
it's
technological
also
leader.
sort of like a charm that Enphase has, because I was actually going to say that I would want to do more research into Enphase and not as much SolarEdge. At least my preliminary opinion, I could be dead wrong, and I'm completely okay with the potential of me being dead wrong. I think a lot of the areas where SolarEdge is currently in, I think that it might be not vaporware, but just sort of not exactly in keeping with like the business itself. I would want to see more so a business while still making acquisitions and acquiring other businesses, like concentrating on its competencies and then mitigating its weaknesses. But that's just me personally. I could be dead wrong, and I'm completely okay with that, but that's kind of the joy that I have with investing, is that when you find out you're wrong, you learn where you're wrong, and then you become right, and then you just build on what's right. And so that's my closing thought here.
All right, well, you guys heard it here, folks. That's our coverage on the request of Enphase and SolarEdge. If you guys have any questions, put them in the comment section below. Again, we're still a small channel, so we're able to more or less respond to every comment when we can. And if you guys have any requests, remember to go to our website at capitalmindset.org and submit the request there. Thanks, guys, for watching.